Welcome to Crypto News Live. I'm your host, Taylor. 84,740 is the price currently for Bitcoin. 84,000. It's pretty wild that we have slipped down to this level. I have some levels drawn out here. This is a uptrending line of support going back quite a ways here, back down from the bear market days in 2023. This is going to be a level to hold. And so far we've wicked down below it. But the weekly candle, the daily candle at least, it has a chance of closing above it. If this does close above that level, that's going to be pretty good. That could potentially bring investors back in who are very early and very speculative, saying, I will try to catch this knife. For those of us who are just holding crypto, this would be a comfort to see that this would hold, and this would potentially be a DCA point for you moving forward. Looking here at this box I have drawn, this might be a curious box to you. Why this box starting up here at 86 and ending down here at 83? This box to me is a little bit of confluence of why I think this could be the bottom here. This is a bottom that that would be interesting for us to see. First thing of why I don't think it's a bottom is because the MACD is spreading, right? The MACD is spreading here on the daily and the histograms are growing, okay? So that's signaling that momentum is still in the bearish side. But as we know, MACD tends to be a bit of a lagging indicator. That's okay. We still look at it. We still think about it. Okay, so what is this box here? This box is very simple. Let me go to the weekly chart and explain. It really isn't that big brain of a thing. But if you take a look here, we did about a 33% pullback back here in the the April through October aquarium or kind of trend that we were in here. And that was the extent of the pullback. Here in this aquarium, I like to call these kind of clusters, these levels, aquariums. The fish hops into the aquarium and then escapes and goes higher and different things like that. But this one here, this would be the next area. And the percentage move for this area was 32%. Okay, so a little bit less of a shed than this one back here, which again, I will do 33.4-ish%. Okay, so looking at the current move, right? And I showed this to you all weeks ago, kind of this comparative drawdown versus the past, two kind of similar trends. We are currently got down to 36%, that wick. Now we're at live price at 33%. So we're coming back into this box. And this zone is, you'll remember these numbers, 31.7 and 33.5. So not exactly, this one as box actually needs to be a little bit higher. But the idea is that the box is kind of the range of the last two drawdowns, the last two major drawdowns. So do it again, this to this, 33 point something, 33, call it 33. And then this one, 32, right? So this is 31.6 again, these and 33.5. Okay, so give you a little grace on the up and the down there for this box. A close in this box would signal to me that we've just done the same thing that we've done the last two times, the last two aquariums that we escaped. A close below this would signal to me that we have lower to go. And where that lower to go would be is where I will end my technical analysis. But that's Bitcoin. It's Bitcoin on the weekly. The weekly MACD is also not slowing down yet, right? And the other thing too to look at with this is the first time that the MACD line has crossed below zero. First time that the MACD line has crossed below zero for a while. When was the last time that it did this in a bull market? Was back here in 2021, right? Okay, so we're in a similar spot where this MACD line is just decidedly going straight down, but then it curls and rips back. And it comes right into a big cluster of red histograms that plateau and eventually decelerate Here we are, the histograms have actually exceeded, right? So the momentum of bearishness has exceeded this previous record. The histograms have printed lower than previous. And so what happened back here? What happened when the MACD was similar to what it was now? Well, this is where you got this bottoming, right? And then you had this relief rally that kind of turned into a new all-time high back in 2021. So am I saying that we're going to go back to new all-time highs? No, that's not why I'm presenting this analysis. But what I am showing is that it does open the door for analysts and investors that are on the sideline to look at that and say, that looks similar. Could we be kind of in harmony with a similar human behavioral type of phenomenon that's going in that would say, okay, once we get the all clear, what's gonna push us up, right? All right, and that brings us to the news. I started with TA because I think for the last couple days I haven't really updated anybody on my view of the technical analysis, and that's okay because I'm not the technical analyst pro in our community. There's plenty of them, but I like to kind of tell the story, and I mostly stick on the daily, mostly the weekly. Let's get into some of the stories here. We're going to actually go to Twitter. But the sentiment for today is selling Bitcoin goes viral. This too shall pass. Fear and greed stays at 14. And then the 25 basis point cut, 62% likely. You heard that correct. And let's go to the live spread on this. You can't write this stuff. You can't make it up. Look at the crisscrossiest. This is the crisscrossiest I've ever seen this spread. And this is the real spread. There's no April Fools going on here. This thing has crisscrossed once, twice, and this is the third time now. And there's a reason for that. Now 65% likely, according to the live spread on that. Earlier this morning, it was 62. And it's because of this first major focus. Fed Williams sees room for further adjustment to rates. So the latest guy, who's a voting member of the Fed, he came in, and this is now the biggest headline in the world because it's not just applicable to crypto, it's applicable to risk across the board. Stocks rebound after Thursday's AI rout as Fed Williams revives rate cut hopes. Rate cut hopes are revived. Okay. As I showed yesterday on the live show, though, if you ask all the LLMs, they still think that we, on average, do not get a cut in December. So we'll see. Maybe I'll run that test again. I don't think that the LLMs had Williams doing a pause. I think he already was cut. So this shouldn't be new news to the market. Regardless, the spreads have shifted, and they've shifted pro risk. All right, I'll go back to the sentiment outlook, but let's take a look here. Bitcoin finally, by the way, sentiment outlook. You might be saying, ooh, there's a sentiment outlook that gets put out every day. Yes, there is. And if you're watching me, you may be watching on YouTube, right? And you are not yet in our trading Discord. That's okay, because you still have an opportunity to do so. There's a link down in the description to join our free Discord trading group. And there's another link where if you're ready to make that commitment, take that next step and really give trading a swing, you can join a group of people who are trading crypto and you can learn how to trade. We also have courses and tutorials of how to use trading exchanges that can optimize your trading strategy. So check out that link down below, and you will be kind of sent to everything you need to get that set up. Taking a look here at Twitter, this account, exit.pump, has access to an interesting indicator that I've never seen before. This says Bitcoin finally seeing signs of bottoming. This was 4 hours ago. Here, as we have the highest positive order book depth delta on Binance spot market on the deepest depth. Rare case. So I don't know what that means completely. I'm not going to claim that I understand that. But if you look at this indicator, I do know what an order book is. And if you look here, you can see that this is an indicator that shows the order book, right? And back here, when we had a big spike I will also say sustained spike and a plateauing of this, you had a nice reversal here for Bitcoin back in April. Okay, so that's what a lot of folks are wondering. Is this April of 2025, Or is this going to be the beginning of the bear market, right? And right now, what this indicator is telling us is that the depth delta, at least on the Binance exchange, is actually coming into a wall of buying. And when the market sees a huge wall of buying, oftentimes they're going to try to get it. They're going to try to go down there and give it their best shot, the bears, and try to break through it to unlock lower levels, price levels. But if they can't get through the buy wall and there's just infinite buyers down there, then there's a problem for bears. And then that's when the investors come off the sidelines and they pounce on these low prices for Bitcoin, and price goes higher because the buyers outpace the sellers. Okay. One of the big whales too, I don't have any information on this one to show you, but one of the big whales too that had been selling, that bought Bitcoin at like 1,000, like 1,100, and bought like a ton of it, he is done. His wallet is completely emptied. Now he may have more wallets, but that individual whale has lost hope for whatever reason, and that is bullish because he can no longer sell into the market, right? That seller has left the table. So there might be more sellers, and there's a possibility of lower to go, but that's the reality at this point. There's a lot going on here, folks. There's a lot. I need to probably pick up the pace. So let me do that. Let's go over here, back to Twitter. Headlines reemerge describing that MSTR maybe, you may have seen this headline today, may be delisted from the MSCI exchange. Wait, what's the MSCI exchange? It's kind of like the S&P 500, kind of like the NASDAQ, kind of like the Dow Jones. By the way, there's a lot of exchanges out there because there's a lot of stock markets. You may not have known about this. The MSCI exchange is kind of like a global exchange. It's much more popular internationally. If you're an international investor, you may know more about the MSCI exchange. Still, it's dominated by United States investors, and that's a little foreshadowing of what I get to here. Though this is true, it does not follow basic investment logic for MSTR to be delisted out of MSCI, because the top holders of MSCI are also the top holders of MSTR. Okay. So why would I cut off my right hand with my left hand? Like, why? It doesn't make sense. There's no incentive there. The incentives are unaligned. Now, if we looked and it was only what Euronext or whatever I can't remember the fund of Peter Schiff, but if it was Peter Schiff that owned all of MSCI, right? If MSCI was primarily owned by Peter Schiff, then I would be worried. But if you look at these names, this is who owns the top shareholders of the index is Vanguard, BlackRock, and State Street, and Morgan Stanley. Okay. These are now Vanguard is, you can make the argument, kind of anti-crypto. The problem with that argument, though, is that when it comes to MicroStrategies, at least, they are not anti-crypto. So if you look at the top holders of MicroStrategies, Strategy Incorporated, MSTR, not pulling any fast ones here, it's the same names, right? You have Capital International Investors, that's a different name, but you have Vanguard, BlackRock, Morgan Stanley. Okay. Are these guys that hold MicroStrategies, are they going to do something unfavorable in an index they control? No. Okay. But you might ask the question, well, why was this even proposed? Why are they even considering removing MicroStrategies from the MSCI exchange? And by the way, let me just make clear, there is a chance that they do remove MicroStrategies from the MSCI exchange, and that would be a problem because certain entities that have bought MicroStrategies can only justify buying MicroStrategies to their board and to the rules that they're beholden to because MicroStrategies is in the MSCI exchange. So we want MicroStrategies to stay in the MSCI exchange. It's a non-0% chance that they get delisted, get taken out. The decision, I believe, is like mid-January, January 15th or 19th, something like this. But again, it doesn't look like they will remove it. Okay. Moving along here, and I'm going to move along. Let's see what else we've got here. The other big one is going to be this one here, the yen carry trade, episode 45. So this is why long-term fiat just sucks. Tim Warren said, go follow Tim Warren Trades on Twitter. Make sure you're staying up to date with all the action. I do this morning stream every day here on YouTube. But if you're looking for the most up-to-date information on what's moving the markets, especially crypto, Tim Warren Trades on Twitter. Crypto doesn't look good right now, but it can fix this. This is the global financial system just broke in Tokyo. That's a little bit hyperbolic. It didn't break, but Japanese 30-year bond hit 3.41% today. Let me show you on the charts. Just kidding. I'm not going to pull up the Japanese 30-year. That number means nothing to you. Here's why it should terrify you. Japan owes 230% of everything it produces. It's the most indebted nation in history. For 35 years, they kept the lights on by borrowing at zero rates. That era has ended. Core inflation is running at 3%. That's about what the U.S. government's inflation is. China has conducted 25th military incursion near Japanese waters. That's kind of unrelated, but true. Every major bank, hedge fund, and institution on earth has borrowed yen at cheap rates. That's the sentence that should bother you, right? Every hedge fund and institution is wound into the carry trade. Now, if you've spent a while in crypto and investing, the yen carry trade is this scary boogeyman that gets brought out every once in a while. And sometimes it's the carry trade actually does have to unwind for one reason or another. In this world that you live in, big financial institutions borrow at sub 1% rates from the Japanese central bank, and then they turn around to other central banks that have treasuries, extremely low risk, guaranteed return, and those returns are above 1%. Some of them are above 4%. So I'm able to take out a loan over here from the Japanese central bank, not you and me, right? But if I'm a hedge fund or if I'm a financial service juggernaut, sophisticated investor, I can come over here to Japan and say, hey, give me your basically free money, 1% loan, and I will go over here and buy treasuries that yield 4%, 5%. Maybe I get exotic and I do something with this money that actually yields me something much more than 4% if I'm willing to take on that risk. That 1% that I can borrow from Japan is coming up, right? So that compresses the spread of those yields. And so it's not as profitable for me to do this maneuver, right? That's bad. That's bad because that's free money, essentially, that's in the market. And when there's free money that's kind of happening in the market, that incentivizes investors to go spend that free money or invest that free money in higher and higher risk places. So if that carry trade is coming in and those yields are compressing, the yield that I can get from this maneuver is compressing. That means that there's uncertainty. That means that the free money machine that the yen carry trade is slowing down. And when you add on the fact that some firms have leveraged the amount of that they are loaning, getting that they are borrowing from Japan to go and play with, that leverage is much more tricky, and that can have quick and volatile effects on the market. Spent way too much time on that, but you are very welcome if you've never been introduced to what the yen carry trade is all about. So, to make it long story short, because there is a next movement to this story, the Japanese new prime minister is heading up a program of stimulus that will make that 1% loan rate higher. Okay. Bad. Good for Japan, kind of. Not really. In a lot of ways, it's very terrible for Japan and their currency. But from the bond market, it actually is also bad because the yields are going to go up, and then you have to incentivize investors to come in and buy those yields. Well, they were incentivized to buy these crap Japanese bonds or engage in this bond market and borrow money from it because the yield was so low. Now the yield is coming up because the yields are attached to the bond market. If they're printing money to generate stimulus to go help their economy, the bonds become worth less and the rates go up, the yields. Okay. If you don't understand that, it's okay. There's a lot of complicated stuff there, but ultimately, a lot of what makes the markets go up is free money being generated in sophisticated ways and handshakes with central banks. Those handshakes and the possibilities of those that generates the free money is coming down. The possibility of that is becoming harder for hedge funds to maintain. So that slows the velocity of money throughout the economy. Scary time. This is a time where you're being very, very tested. I know that I am. I might come across as level-headed here, cool, and long and calm, and I am. I'm still very long, and that number is going down in a way that does not put a smile on my face, other than the other side of the coin, which is that when price comes down, I can buy at lower price. Now, it would have been nice to have sold at a higher price to be able to have a big stash of cash, but so is life. C'est la vie. This is the game we play, and this is the bed that we make, and this is the bed we must sleep in. Taking a look here, some bullish news for SUI. Grayscale SUI Trust is now live. Now, this is not an ETF. It is a trust, kind of reminiscent of the 2021 trust situation that came around. But this is, I think, definitely a net benefit for SUI. Institutional movement for SUI. All right, let's look at the ETF stuff. This is interesting. And then I want to wrap it up with kind of some psychological talk, help you kind of think through some of the anxieties that you may be facing. And then we'll talk about one more thing actually in between that and the psychological talk. But take a look here. This is not what you want to see, but this is what you need to see to know what's going on. This is the Bitcoin ETF inflows, and away I go so I can show the whole screen. This is the second biggest inflow on record. I guess the other one must have been in 2024, but this is the biggest on record. Just when we had gotten a positive day, an inflow day yesterday, or on the 19th, the 20th printed extremely bearish, right? So again, this begs the question: is this the beginning of the end of the bull market, or is this just a pullback like we saw in 2021 that is going to result in what could be a huge movement back up to the upside? 200, 500 Bitcoin, 500,000 Bitcoin. It could be, right? We don't know. We don't know what the future is. We can't control the market. What we can control is how much we lose. That's all we can control, is how much we lose. All right, so let's go ahead. We took a look at the Bitcoin ETFs, and they look rough. Let's look at the Solana ETF, though. Continues to have its green streak. Inflows for days. I think this is going on like 15 days or something like that. Ethereum not looking good. Again, just when we had a deceleration of these histograms, these red histograms that denote outflows for the Ethereum ETFs, now we get a big candlestick that comes down, the big histogram that comes down and matches the peak of this cluster. So not great, not good at all, because just when things were looking okay, then we had a big movement. Okay, let me show you all one more story, and then I'll tie all this up with a bow for those of you to understand what's going on. I think I summarized it pretty well here in this. So Tom Lee explains that there is likely a hole in the balance sheet of market makers due to the October 10th event. Okay, and this needs a bit of a camp out here. So October 10th may have destroyed a major player in crypto. And there is a bot in the metaphor that Warren Buffett created. I believe it was Warren Buffett. It probably was somebody else. But he said when prices come down, and he says when the recession hits, that's when the tide goes back out and you see all the dead bodies, right? Right now, the tide is going out. And because of this 10-10 event, there is likely a dead body that has not come to the surface. This is a little bit like a sell the bombs, buy the body count type of situation. The market has sold the death, the bankrupt, the inviability, the scary situation that's likely to have happened, the 10-10, right? It's been down since then, essentially. And it will, the theory is that it will buy when it's revealed who went down. So the market has repriced a bankruptcy in crypto. So there's likely, whether it be a big market maker, that's what it seems like Tom Lee is kind of pointing towards, or whatever, some institution lost a bunch of money. In the 2022 bear market entry, FTX wasn't really bankrupt, but it had some extremely serious issues, and it blew up in a way that caused prices to go lower. But it was the event that caused the prices to go lower. Everybody was still having a party. They didn't understand the FTX was kind of, it was breaking the law, and it needed to be investigated, and it had become inviable. And then you had Three Arrows Capital, Signature Bank, and I can't remember the other one, the other bank. But there were three main entities that they were the ones that really took the hit, right? They had the assets on their balance sheet that plummeted. So that wick on October 10th, somebody shed blood with that, and we don't know who it is yet. That is at least what Tom Lee is kind of trying to explain. Now he says he's unwilling to share who he thinks that is, and I don't blame him, because speculation may not be the best thing to do at this point. We will find out soon enough. To tie it up with a bow, I am not seeing what I need to see to sell my assets, to sell my digital assets. That might come as a shock to you. That might come as foolish, and you may already be out in the market. I know we have Eric Wallen, who's our resident guy who sold the top. Love him. He's great. Honestly, we'll be taking his analysis a lot more seriously from here on out. But a lot of people are in pain right now. Pain is not a reason to sell all of the time. Emotions are not the basis for which we make our financial decisions. Right? Trajectories of markets, trajectories of value is what I invest based upon, right? Mix that in with the opinions of others that I value. I'm coming to the conclusion that this is a painful dip. This is more than a dip at this point. This is a painful face rip-off moment for digital assets, but this is still a buying opportunity net. It is so painful because it seems like the entity, and I don't think it's Binance. Jolenberg. I don't think it's Binance. I don't think it's Binance that is bankrupt, right? That is insolvent, right? I think that there's probably a little investment firm that nobody's ever heard of, and they were the ones that ultimately were targeted, or something like that, through 10/10, through the October 10th wick. There was also a lot of retail that got totally destroyed on that, right? But I think it's going to be something in the perp dex world, is kind of my estimation. Or it could be one of these investment houses in Asia that just buy a lot of altcoins in speculating, kind of doing that. Stanton says Wintermute. Again, I think these guys are set up in a way that I wouldn't say that they're impenetrable, but I don't think it's going to be a name that we know, is my guess. Somebody saying Tether. I don't think so. I don't think anybody has said the correct one, because I also don't know what it is. I think there's also, it needs to be said that it's not clear to me that this is actually what Tom Lee is saying. I don't think he believes it 100% that it has to be true, that there is a dead body floating, but because it could have just been all of retail. It could have just been all of the retail that was leverage trading 10/10. They were the ones that paid the piper. They're the ones that had the financial loss, the actual loss. But I think what he's saying is that this time Lee's kind of claim is that this time there may have been an institution similar to past cycles that got nicked with this one, and it has yet to come to light that it's bleeding. It's also possible that it got bailed out, right? That somebody like Binance or a big institution like Tether bailed out that institution, and the party keeps going, but the market's not convinced, and that's why we continue to see the sell-off. Asset tokenization platform Securitize has partnered with Plume Networks Nest protocol to bring institutional assets on chain. I know you don't want to hear this right now, but the projects are still building, right? The projects are still building. All right, let's look at some comments here. I'm going to have to be late for a meeting because I think this is just an important stream. Moho said, Wintermute and Binance are the people that probably profited the most from 10/10. They are the ones that manipulated the market direction. Jagger said buy bit or MEXC. Right. I think that's kind of where we're at. I think it's going to be, unfortunately, something along those lines. But again, I don't know. I'm not trying to beat around a bush because I don't know what the bush's name is. I genuinely don't, and I don't think that should surprise you. Warrior said, and what is super awesome is they are selling out of the ETFs on the open market and driving prices down and only buying OTC, absolutely screwing. No, so that's the problem. I don't think that that's true, Warrior. And you're in the Discord. You're someone who I know, like, and trust. I'd like to see some evidence of that because I spent a decent amount of time with multiple LLMs checking on that. I don't know who you're referring to. So you might be referring to a smaller market maker that is buying OTC and selling on chain. But I haven't seen evidence that somebody like, what was the claim? BlackRock was doing that. BlackRock is definitely not doing that. But there may be somebody else who is. All right. So let me land this. Crypto is the Wild West. It hasn't stopped being the Wild West. But we forgot that it's the Wild West. I think a lot of us. The reality is that when it comes to your portfolio, when it comes to my portfolio, the way that I'm thinking about this is what is going to make me absolutely have an unbearable future that I have to face? What is the path that I'm going to take? Is it going to be more bearable to see my price go down and then sell and not have the price go down anymore, right? Will I be able to bear that more than taking profits, selling, and seeing the price come back up in a V-shaped recovery? Which is going to be harder to bear? Seeing the price come back up after selling, or the continued downside that we might see? Okay, that's the best way to put it. Whatever I just said was trash. This is the best way to put it. What is going to be easier for you to bear? And I'm speaking right to you right now. Like, I'm not doing anything else other than just telling you the thought process that I have. What is going to be easier for me to bear is to see number go down in assets that I have high conviction in. And I've dedicated my whole life in some sense to explaining why I have those convictions. But as we wrap up this stream, as the price comes down, it hurts. It hurts to see that. It's sometimes a little bit difficult to fall asleep in these high compression moments. Right. I personally have been through some pretty difficult military training, and I've also been through the 2023 bear market for crypto. So I'm not saying I'm better than anybody else at all. In fact, most people probably have more fortitude than I do. But if you are someone who's never been through a difficult investment period, you have to ask yourself, what is going to be more difficult to bear, right? And this is different from making investment decisions based on emotion. You had a plan. Your plan, my investment plan has gotten sidelined, right? Something went wrong. It took a left turn. But as a proper risk manager, we knew that there was a possibility. Just as if we're thinking that Bitcoin can go to $200,000, $500,000, we have to also consider that if an asset can be that volatile, of course it can come back down a similar percentage. Okay. So by nature of this asset class, if it's a high vol, you have to consider the downside too. So I have done that work. I have done that meditation. Does it mean that it's easy for me to see the number come down? No, I'm not completely numb to it. Okay. So I think that that's helpful. Which can you bear more? Can you bear to just go ahead and just take the losses? By the way, there's some tax loss harvesting benefits to taking the losses, depending on how you're set up in your life. That might be a good strategy. But can you bear to see the prices just launch back to the upside and you're not able to participate, right? You don't have exposure. Is that more bearable to you, or is it going to be unbearable to watch the price continue to go down? You have to make that judgment for yourself, and maybe you find somewhere in between. Maybe you cut losses and you stay 50% exposed, whatever it is. What I will say, though, is that it has paid. There has been multiple things that Tim and I would say specifically me, has been preaching and trying to help you all realize the biggest one is risk management. If you have not been risk managing, you are probably not listening to the sound of my voice because you're out. You might be curious what's going on in crypto, but you're completely unexposed. You're out. If you're an excellent risk manager like Eric Wallen, maybe you're out, but you sold for a profit. So yeah, I think I've made it clear here. I'm glad that we have been so vocal about being good risk managers. I've also been vocal about staying, and Tim has too, about staying up the risk curve with a significant amount of money, meaning Solana, Bitcoin, Ethereum, a little XRP, right? The amount of money that I have in the longer tail, lower in the longer tail, the higher risk plays like Ondo, Tau, Sui, the ones that are a little more unproven, is not it's not insignificant because I've had significant exposure, but that is not keeping me up at night. What's keeping me up at night, if to the extent that I am being kept up, is that it is whether I should just sell it all and walk away altogether, right? A big number in my portfolio. Should I just cut it all and just leave it there? And the answer is the resolution, the way that these thoughts resolve for me, and what puts me in a nice, warm, and cozy sleep at night is that I have done the due diligence, I have done the risk management, and if all of what I've invested in goes to zero, which is impossible because I have a decent amount of stocks, right, in my IRA and otherwise, and other investments, precious metals, right? There's other things that I have that are valuable than just crypto. But if my crypto goes to zero, it won't be because I didn't have conviction in the underlying value of the assets, right? It will be because the market is not something I can control, and the market ultimately disagreed with my valuation of these assets. That's what a market is, right? That's what a market is, and I can't be mad at it. What I would be mad at, and what I think is unhealthy, is if I don't even know what Bitcoin really is. If I've never even cracked open the white paper and understood what a blockchain is, then watching the number go down, it's complete insanity, right? That doesn't make any sense. But I have faith. I believe that these assets are going to be more valuable in the future. And it's really not that hard for me to believe that and fall asleep quickly because we've seen it so many times in the history of these asset classes. For Sui, for Ondo, the newer coins, I'm holding on to them, but I don't have the same position size as I do for Bitcoin and Ethereum that are much more battle tested. That's risk management. That's staying up the risk curve. And that's what it takes. That's what it takes to keep your place at the table, to be able to come back and roll the dice again at the market, right? This is how we do it. I love it. I hope you all are soldiering through. Didn't really get to too many of the comments here, but look, I told you all about 2 or 3 weeks ago, if you need to pay rent, if you are overexposed, you got to get out. Hopefully you all heeded those words and that you are not sitting here looking at overdue rent payments at this point in time. Right. I hope that it hasn't gotten that extreme for you. If it has, prioritize the important things: hydration, sleep. Do not damage relationships. Do not get snippy. Do not be short with people like your parents, especially not your spouse or your kids or whatever. Those relationships are very important right now. They might say silly things about your crypto obsession or whatever. Don't let that get to you. Stay hydrated. Stay eating food. Don't skip meals. Get plenty of sleep. Go to sleep early. Don't be staying up trading and scrolling through Twitter, right? Take care of yourself. Take care of your body. You will live to fight another day. There are people around the world going through way, way worse than you are. If you are in a country that's free, you have the opportunity to come back from this. Okay. Focus on the basics: food, sleep, hydration, and relationships. Do not damage your relationships. You might be hearing, be like, wait, what does that have to do with anything? I'm not talking about romance. I'm talking about people that you trust and that trust you and that maybe even rely on you. Those are the most important things, right? The number on an app is important, but it is not as important as the relationships. Do not damage your relationships, and stay hydrated. It's very simple. Stay focused on those things and continue to manage your risk, manage your portfolio the best you can. I will not be here Monday and Tuesday. I'm going to try to do lives, but I'm moving from Virginia back down to the great state of Florida. So be praying for me in our travels there, because it is a very long drive. But yeah, Monday and Tuesday, uncertain if I'm going to be able to bring you all the morning news. Wednesday, I should be back. I will be tweeting and sharing my thoughts there, and I will be active on Discord. So if you guys have any questions, don't hesitate to ask me. And here we go. Let's end on a really good note. BDDT3T is a user of YouTube, and they said, you still think Jupiter looks good. That is a great note to land this on. The extremely silver lining of all this is that these prices are extremely cheap. And if you have dry powder, if you have the risk tolerance to keep buying, I mean, the Federal Reserve is about to go into a quantitative easing cycle. Japan, the carry trade is going to be a temporary damage to the market, but they are injecting stimulus. China injecting stimulus, right? The liquidity play has just been delayed. There's so much to be bullish about in this market, and I know that doesn't feel like it right now, but there are just some structural pain points that have to flush through the market, and once that happens, there will be upside for the alternative to the financial system that sucks so bad. The alternative will prevail. What gold has shown us on the charts is the foreshadowing of the alternative to the financial system, right? Gold is the next best thing, but it doesn't have transferability. It's not congruent with the internet. It's not compatible with the internet. The TradFi system is clinging on to the internet, but the fundamentals of it, the bond market, is done. It's toast. The curtains have been closed already. We are seeing zombie actors continue to animate the TradFi system in a way that is very silly, and the writing is on the wall. Crypto is going to still replace that. Gold is showing us that the system is broken, but gold is not crypto, right? Gold is still valuable, always will be. It was in the manger with baby Jesus, right? When the wise men gave it to him. And all along since then to now, gold has maintained a high value price, but it is not transferable online. It is not going to be what AI agents are trading back and forth, right? Went longer than I needed to. Hopefully all that end with a silver lining. Absolutely. Adios.